Picture this, tech giants are burning through $500 billion this year just to chase AI dreams. What in the world does that mean for your portfolio? Well, here's a picture for you. Meta, Google, Amazon, Microsoft. Together, they are spending over $600 billion in Capex spending and AI build out for infrastructure. You can match up to see who's spending the most. It's basically Amazon, Alphabet, Google, Meta, and Microsoft in that order. And here's some individual names or an individual look at each one. So Amazon last year, 131. This year, estimating 200 billion. Last year for Google, 93. This year, estimating 180. Meta, last year, 70. This year, estimated 105. Combined in 2026, again, over $600 billion, a nearly 36% year over year spending on CapEx. That's a guided estimate for 2026 versus last year. This is why these heavy beta, big five hyperscalers are getting hit, especially on earnings. Meta didn't get hit on earnings because they're the ones that are actually bringing in some revenue AI-wise. But Amazon, Google, Microsoft, all of them are spending huge amounts of CapEx, and they're kind of going through a re-weighting in price. There's other factors that are going into the bigger picture of basically software. How valuable is it now, especially if individuals such as myself, or maybe you, if you're not a coder, that we can just create code basically out of thin air. We can ask Gemini, we can ask Grok, we can ask Claude Code, which is absolutely great at it. We can ask ChatGPT to write code for us to create all of these products. So is software really that valuable now? And what is more valuable, the infrastructure, the actual materials, the material world to help build out these infrastructure capabilities that they are spending the CapEx on? And so we have a lot of factors playing in, but right now the big picture is CapEx and if they can actually start making money with AI and how soon can they bring in revenue. So tech is not the place to be right now. At least if you're looking long, it's really not the place to be. If you're looking short, that's a different story, but there are different places to be and pay attention to, and we're going to get started with those. But first, let's start with the S&P 500 first. You can see SPX here, this is the cash index. It's chopping sideways. It's not really doing much. We've had 3 down days, but a good majority of that move has been taken up by today's move, up to nearly 2% on the day, which is pretty good. We're only 1% away from all-time highs. It's not that big of a deal. If you are paying to tech, it might seem like doom and gloom and the sky is falling. But there are other names. The reason why this is holding up is because it's rotational, and rotation keeps bull markets alive. RSP, equally weighted S&P 500. Last week, I put a little like doming here. I deleted it. Obviously, it's wrong, right? This is equally weighted of all of the 500 names within the S&P 500. And so you can see, taking out the heavy weights, the market's doing pretty darn good. It broke out and now it's trending. It just broke out of this little sideways consolidation. It tagged the 21, the 8 and 21s are moving on up. The 50s moving up, the 200s moving up. Overall, equally weighted, we're pretty good. NASDAQ is not the same story. NASDAQ is basically tech. Tech moves this the most, right? So it's chopping around sideways. It's not doing anything. It's not doing anything at all. So maybe we get chop all freaking year until tech actually shows that they can make money with this AI and CapEx build out. We'll go over that shortly with the differences. But basically right here, this level, 24,500 or so, it's been, we can just say 24,600. It's been an area of interest. We did make it a lower low versus this low. Now, I was anticipating some sort of bounce into the end of the week. We have short covers, people that are short that don't want to hold their short positions over the weekend for risk management. Plus, we've had 1.5, 1 3/4, and then another 1.5 down day, 3 days in a row. We moved from high on Tuesday to low on Thursday, 5.5% about. So you would expect some sort of bounce some point soon. Just short term, it was quote unquote slightly extended. So looking for a bounce in this area, we got it. What happens next? Not sure. We could just continue to actually start a downtrend now, but otherwise, until something actually happens and actually changes, This is tech is just chopping sideways. You have to find somewhere else to be. Here's the equally weighted. Again, this actually broke these lows. So this looks even worse, equally weighted across the tech. A couple of things can happen here. It can break down, which it kind of did. It can retest and then continue lower and make lower lows and lower highs. Or what it could do is, as a second scenario, remember, it's important to have scenarios. It can break that low. Nobody else sells. This is a lot of potential supply up here. Nobody else sells. It retests and it actually accepts back into the range, right? And then at that point, maybe we have a little pullback here to set a higher low versus here, and then we, I don't know, chop around inside, or eventually go and break out at some point in time. There's no way of knowing. But overall, right now, since this last week, since my last video, the change is to the downside. And the bigger picture is it still needs to be written for the longs. And it's just not right now. Dow, look at that. Breakout, all-time highs. Congratulations. That's awesome. IWM, and this looks pretty good as well, right? And so there are places to be. Again, tech is just not it. Let's look at Microsoft. Microsoft had earnings last week. It got hit. It broke this kind of wedge. If you want to look at the shorter time frame, it was wedging here. I'm pretty sure I actually drew that on my my last video last week. Yeah, and look, so it broke down and it just continues to trend down. It's because, again, Capex, they're spending a ton of money. So software is going through a pretty large evaluation because the supply software it can just be created out of thin air nowadays with AI. You can literally go and code something yourself. So is software really super valuable anymore? It's not as valuable, especially if there's people like you and me can no longer need to hire somebody that codes. And so it's pretty interesting that they're kind of like eating themselves here with creating these tools via AI. So they're kind of going through a repricing period. That's how I am seeing it. So I've been calling for the gap fill. We did get the gap fill. What happens next? I think we get a little bit of a bounce into early next week to the shorter term EMAs. Maybe sets up another short opportunity and potentially continues down if we continue to get a price correction. This 373.02 is a potential, and then even the gap fill, it's not that large of a gap. So 367.77, that down here is a potential. And if even further continue weakness, 345, right? Those are some levels to pay attention to. But we will cross those roads when we get there. NVIDIA's not doing anything. Had a nice little bounce today. Has earnings coming up in a couple of weeks, but not next week. Nope, not next week. So it's just not really doing anything, chopping around. Apple looks pretty solid. Apple looks good. If you wanted to long Apple, or if you're looking for longs in tech, Apple would be it. I think Google is still it too, even though it got hit the past couple of days. Amazon, gap down on earnings. It's below all of this supply here. So it's at the potential area of supply by this prior support zone. So we're going to have to see what actually happens here. What you can do is set an anchor VWAP to the earnings day. We can look at the 30-minute chart so you can see that all day buyers bought at the anchored VWAP, the volume weighted average price. From opening anchored at the open. It's just the VWAP of the day. But it has more to prove. This could easily continue on down if individuals and buyers decided to sell and wait for a longer period of time for these big tech companies to actually make money with this AI and relative to the Capex spending. Avgo, Broadcom, retesting here. Lower lows and lower highs are being made. It tagged to 200. We have the gap fill. I don't know what to say. There's better places to be. Meta, I did take the long near the close here. I will show you what I'm risking here. So my entry was 66.81. Basically, why we opened here at 65.49. We sold all the way off, undercut yesterday's lows, and bought all the way back up. There's a nice bottom tail. It undercut the 50. It's near the 200 EMA. The anchored VWAP from this prior low was also in this area. So I took a chance, which I think we're going to open up with a continued bounce into next week, simply because of how oversold things are just from this week. From this high to today's low, we have a 13%-ish correction. price dip. So I think, if you're short up here, you take and you start covering into the weekend, and maybe you cover into early next week to set up another potential short area. So it's a quick trade on Meta on my end, but overall, we finally got that gap fill. It took earnings to actually sell off into the gap fill, but you know, we'll just play it by ear by that. Netflix, I took a few losses here, three actually, unfortunately this week. I was trying to catch trades here, but it did not work out. It kept stopping me out. So it is what it is. Either way, it still looks weak. I would still continue to try and short this, but maybe it starts basing here. The big thing is it's holding below this prior support area, this 82 level. I still think it goes down to 74.50-ish or so, 74 range. When is the challenge? Getting the timing is the challenge here for me. Tesla, I think, is going to have a great 2026. It's just not having a great right now. Tag the 200 EMA. Nice indecision doji. Bounce today. Under short term, it's nothing to do right now. Google's got hit since earnings. Tag the 50 EMA. It is holding this prior level of supply, and it retested here, and it held. It failed to hold here, but now it's holding again. So this like 320-ish level is rather important, as well as the 50 here. If not, this could potentially just start to digest in this range of 293. If it breaks 293, maybe we get the small gap fill here and make our way to 256 or so. We shall see. Capex. CrowdStrike looks terrible. Failed to hold this support level here. Where can this go? Maybe to 350 or so. Not interested. Shorts look good. ServiceNow. This has been taken out of the NYSE FANG index, failing to hold this prior support area here. How low can it go? Not sure. Not interested. Palantir, not an ideal look, unfortunately. It just blew by the 200 EMA. Did great on earnings. Earnings ended up being a potential a short opportunity right into the 21, declining 21 EMA, declining 8 EMA, declining 50, flattening 200. So this could be a distribution pattern. It depends on what happens here. What could happen is we could accept back into here and continue to chop around, or what seems likely is retest the breakout, sets up a short position, and we start trending lower. Maybe base somewhere, but I don't know. Not trying to do it. Better places to be. Hood got smoked because of Bitcoin. Bitcoin got hit this week. I think it had a low of like 63,000. So this had a huge retracement. Again, I was trying to catch a trade for a bounce yesterday, anticipating a bounce today. But the setup wasn't there, so I didn't catch it. We do have earnings next week on Tuesday after close, so I think that'll be make or break for Hood. They probably got a lot of revenue from volume of trading with Bitcoin and things like that, just from the sell-off. So hopefully, ideally it gets back into this range with a nice gap up and holds. Otherwise, I will probably sell and reset. Financials, it's not really the place to be right now. There are better places. They look okay. We're going to skip that. XLV, the healthcare sector. This is a place to be. Eli Lilly is just consolidating right now, but when it breaks this 1122, 1110 to 1120-ish area level, I think it gets going. Why? J&J is nice. J&J has been trending very nicely. You don't chase it up here, but this is a name to pay attention to for pullbacks. XLV looks good. AbbVie, it's just chopping around, nothing crazy. GE, XLI industrials are a place to be. GE Aerospace, it looks okay, just looking for a breakout basically above this 330 level. CAT looks good. I mentioned this last week right here. It broke out, it came back, it retested the downtrend line. If you guys pay attention to that, and ripped today. Caterpillar is a great name to focus on. It's hitting all-time highs. Trend is your friend until it bends in the end. RTX looks pretty decent. It's just chopping around, consolidating, not really doing much right now. It needs to break this range that it is in, and then it's a go. I would say Walmart is another area, another place you need to be at. We do have earnings coming up in a couple weeks, just not yet. Very strong name, hitting all-time highs. Costco also downtrend line. We have a trend reversal here. We had a nice blast off. I mentioned this last week that we're looking for a higher low versus this low. We got that starting on Monday. After the perfect, darn near perfect 200 EMA tag. Short-term EMAs are up, long-term EMAs are up. Costco looks absolutely great. So it's not a mover and groover like the high beta tech stocks, but it looks pretty good. P&G looks okay. Trend reversal. Just look for a higher low. Coca-Cola, not a super mover, but it has moved, especially over the past like 3 weeks. It's a little extended here at this point in time, but if you trade slow movers like that, it looks pretty decent. XLE energy is another place to be. So the places to be right now are healthcare, industrials, and energy, in my opinion. Exxon, huge XL, that's the heaviest weight in XLE. Last that I checked, we have a huge breakout. It's hitting all-time highs. It's trending. This is not the area to buy at. I think you need a little bit of a reset to have proper risk management. Otherwise, you're really going to short-term swing it. CBX looks pretty darn good as well. And then ConocoPhillips. If you've been watching my videos, downtrend line. So phase 4, consolidation, phase 1, and then now we're going into a phase 2. COP looks great actually for next week. What I would look for, I'm actually going to set an alert for myself, is a break of the highs of this week, basically, and potentially set up for a continuation into next week. Yeah, especially because it broke this level here. We can basically look for the next level. It broke and held this here. What we can look for next week, maybe it hits it next week. Probably not. It's a decent move. 10% move next week. I don't know. We'll see. But either way, next level to pay attention to is this area right in here to find potential supply. Taps there, pulls back, sets a higher low, trend continues. Looking for that. XLU, utilities, another place you need to be in. NEE looks pretty good. Cup, handle, blast off. So NEE, I would look for to move into next week as well. That looks pretty solid. I'm going to set an alert around this area for continuation next week. SO looks whatever. Duke, whatever. CEG, not it, not right now. Real estate, like you can look into this if you want. Welltower looks pretty good for a trend reversal, but it's not a super volatile name. It's more of a slow grinder. So if that's your thing, have at it. Let's move on to XLB, LIN, NEM. These guys like metals and miners and things like that. Just be careful. They're super volatile. You can really get hurt. Bitcoin. Here's Bitcoin. Broke this consolidation level after trying to break the 94, 95K. It failed and it just got smoked this week. It is having a nice bounce today. This is what crypto does. It sells off, it either consolidates and continues on, but when the bounces come, the bounces are violent. And where did this find a bid at? We're going to mark this level because this level is important now. So this swing low, there you go. Look where that lines up. Okay. We are going to pay attention to that right there. This swing low is going to be very important. Maybe it comes back down to, what was the low? 59,930. So maybe it chops within this range and the EMAs catch up and start. But Bitcoin, it has some building to do, it looks like, from a technical analysis point of view. It's in a bear market. Sorry to tell you. If you disagree, that's fine. You have every right to, but Bitcoin's in a bear market. This doesn't look good. It's going to take some time, especially if you know the history of Bitcoin with pretty harsh sell-offs. Gold looks like it's getting a little bounce here. Whether it hits these highs again, yeah, I don't know about that. I'm not trading gold right now. I do trade gold futures when it's appropriate, but right now in metals, the way to manage your risk is just not it. Like, look at these silver futures within, let's see, the high here. What is it? 121.78. We're just gonna go here. Estimated guess from the lows within 6 trading days, nearly 50%, 47.5, 48% within 6 trading days. You cannot, and with how leveraged these futures are, a lot of people got hurt on this, and I'm not I'm not happy that that happened, but that's a fact. And if with the euphoria and all the people that were not accepting that this is possible out of silver and metals and gold, those are the individuals that most likely got hurt. I hope I'm wrong, but I'm most likely not. So we're going to skip metals for now. Other names to pay attention to: MSTR, potential scenario here. So looking at the long-term MAs, 200 is going down, 50 is going down. Then the shorter term MAs, the 21 is going down, the 8 EMA is going down. We have a nice bounce today. Again, kind of expected. We had earnings. Bitcoin's bouncing. All, the crypto related names are bouncing because they have been absolutely crushed. What we look for here is a bounce, which it is doing. What happens in this prior support area is important. If it finds supply, we can get another little pullback. Then what we look for is a potential higher low versus this low, and to get back into this range, okay? Or it goes, blast right into the range. Either way, scenario one gets back into the range, it starts basing and starts curling upwards. Or scenario number two, we get the bounce, we find supply, and we get lower lows and lower highs, and we continue downtrending. So just have your plan, be prepared ahead of time. Other names: TSM looks freaking great. What I am going to do is set an alert for a break of last week's highs, somewhere around there. It's a little off, but I will adjust it. And we look for continuation, especially out of this consolidation area. It's been doing nothing. If you look at the weekly chart for basically breakout here, 1, 2, 3, 4, 5 weeks has been resting. 4 weeks has been resting. You can argue nuance here, but either way, nice base, breakout, basing again, little shorter term consolidation to short term MAs, and continue on down. And then we got Oracle. This just continues to trend downwards. Where this is going to go, we got the gap fill here. I don't know. This could go next gap fill. It looks like it's from 131 area to 127 area. I wouldn't be shocked if it hit 118. I think it's got some financial issues tied up with OpenAI. So we'll see what happens. All right, subscribe. I also posted up a FinX segment that basically tracks the most popular names that hit Financial X throughout the week. That stuff can move like wildfire. So I'm just trying to cover that for you and give you guys some insights on technical analysis and maybe names to focus on versus names not to focus on, because it's important to have a plan. So if I can help you out that way, I gladly will. Again, big picture, what is going on? It's about the Capex right now. Meta, Google, Amazon, Microsoft, they are spending huge amounts of Capex. They make up a huge percentage of the weight for the Qs, for tech, basically. That's why the Qs, the NQ, is lagging behind. The S&P 500, they have 400 more names that money can flow into, so it's doing a little bit better. Overall, Meta's making some revenue on AI, and I think Google is making some revenue as well. But bigger picture-wise, it is nowhere near the amount of Capex that they are spending individually. So they're going through a repricing to see how valuable they really are, because their amount of free cash flow is decreasing because of the amount of Capex that they are spending. Okay, hopefully that is helpful for you guys. Like, subscribe, comment, go watch my other videos. If you like to get a feel on what I go through at each week, and then also go watch my FinX videos. I go through the names that are most popular that kind of quote unquote buzz on FinX and give you my point of view, technical analysis wise, whether you should touch it, whether you should even prepare for it, whether you're going long or short. It kind of depends, but it's never financial advice, just my opinion. All right, you guys trade well, get away from the screens, and good luck next week. Do your homework. Later.